Hey everyone, how are you? This is the TA Mortgage podcast number 43 with the legendary John Coleman. How are you, John?
Mate, please, legendary, I think is definitely overstating it. But the humble John Coleman, shall we say, I'd much prefer that as an introduction than
The
legendary.
humble John Coleman. I like it.
Okay. So yeah, no, I'm all
Absolutely.
good. I'm looking forward to our session today, buddy, as always.
Yeah, and we have some great stuff that I know a lot of people really want to dive into. And that's, of course, government schemes and grants for home buying, mortgage. And this is going to be an update for 2026. So it's going to cover a lot of what's available, updates to the schemes and grants, new schemes and grants, and even tips or what people should be aware of for this year. So absolutely.
Yeah, it's definitely a question I get asked every single day. And we've discussed this before, there are certain misunderstandings and that are crucial misunderstandings that we'll tease out again on this call, on this session.
All right. Well, let's get to it. So now we're going to bring you a reminder of the different government schemes and grants available in Ireland in 2026 and supporting your property and mortgage needs to know what's going on with these grants and schemes and what's available. So I'll list some of them that we're going to go over, John, and you give your insight. Of course, we're talking about the first home scheme and updates to regional property price ceilings, which is important. The Help to Buy scheme and 2026 extensions. And then, of course, the local authority affordable purchase scheme. And so why don't you give us your thoughts on those?
Okay, well, I think the one that's easiest to start with will be the Help to Buy scheme, okay? Because that's very simple. That is basically, it's a refund, if you want to view it in these terms, of the tax that you've paid in the 4 previous years. Now, as we record this, we are July 2026. So it's the tax that you've paid in 25, 24, 23, and 22, okay? And it is basically available to all new properties with a maximum ceiling of 500,000. Okay, that's the most important thing. Now, I've said this on here before, that 500,000 limit has not changed in about 5 years.
Mm-hmm.
And for me, that has caused a slightly downgrading of the value of the Help to Buy scheme. Okay, because previously you could have bought a house in central Dublin for 500,000. Now you might even get a property for 500,000 in Dublin. That's new. So that's the first thing you need to be aware of. And the second part of this, you need to be borrowing 70% of the cost price. So if you're buying, and this is really important when you come to mix it with the other schemes, okay? So if you're buying a property for 500,000, the bank need to be able to lend to you basically 350,000, which is basically 70%. If you're borrowing less than that, you will not qualify for the Help to Buy. Their view on it is you have a big enough deposit to use. And they kind of looked at it in the wrong way, but that's their thinking. So they're the two kind of caps. New properties, 500,000, and have to be borrowing 70% of the cost price.
Okay, great. And so that's the, of course, Help to Buy scheme. How about the first home scheme? And I know there are some particulars about how it can help you get a property, who should avail the scheme, and also price caps for 2026 that we want to go over.
Yeah, well, the first home scheme, and this is again important for people to know, is basically, it's not a refund, okay? You are now buying the property with the scheme. The scheme will take a percentage value of the property. So now I'm going to touch on the scheme can basically take as little as 2%, as much as 30%. If you want to use the Help to Buy scheme, the maximum is 20%, okay? But let's work an example, okay? You have a property price at 500,000. You're using the Help to Buy as well, say that you're getting 30,000 there. So the maximum that you would get would be 20,000, okay? So you would get 100,000 for that, from the first home scheme. Now, here's what's really important. For the first 5 years, you make no payment, okay? but you still own basically 20% of the value of your property belongs to the scheme, basically. Okay. And in this case, after in year 5, you do have a service charge. In year 6, you have a very small service charge. Every single year, you'll have a service charge to cover what you actually owe. But this is where a lot of people wouldn't understand this, and a lot of people don't get into the finite detail around this, because put yourself in the shoes of a first-time buyer. You don't really care, okay? You just want some money to get your home, and let the consequence. And if you're not thinking about it properly, let the consequences sort themselves out at a later.
It's like when you're a first-time buyer, it's like, okay, how much do I need out of my bank account, and what will my monthly payment be? That's like all you're thinking about in the short term, you know.
And by the way, I was one of these people, so I absolutely get that. So there's no judgment here.
Me too. Yeah.
My role here is to be the teacher that you don't like. I've said this before, but it's telling you what you need to know, right? So
Yeah.
In truth, how would I describe it? You still owe basically the 20%, and you will have a monthly repayment in year 6. Okay, you can buy back at any point, right? But it's not so in this case, right? You took out 500,000 was the cost. You got 20%, which is 100,000. Okay, it's not 100 extra thousand you owe. You owe 20% of whatever the value is at the point you're actually looking to sell. Okay, or you want to buy it back. Now that does work both ways. If the prices had fallen for whatever reason, well, obviously you wouldn't owe them as much. But if you're holding a property for a long period of time, you would expect the value to go up. So in real terms, you are basically, in this case, not giving away, but that someone has 20% of the value of the property until you pay it back.
Okay.
So if you think you're buying a property that's going up in value, well, you're only getting 80% of the increase of the value. Whoever's the first home scheme is getting the other side of things. So it's really, really important to keep that in your mind, that it's not free money, and you will have to pay it back. Okay. Now it's only in existence kind of around 3 years at this point. So what people will start to do, okay, is after the 3-year period, if they can, okay, and this is an important point, if they can, they will look to remortgage the whole thing.
Yep.
And bundle it all into one mortgage. But that's obviously subject to the value of the property being at the point where they can do that, and that their incomes would allow it. Okay.
Yep. The equity in their financials have to qualify.
Because keep in mind, they didn't get the full mortgage in the first place because their salaries didn't qualify. So their circumstances from an income point of view would have need to change to allow them borrow the full amount. Does that make sense?
Oh, you said this has been around for 3 years, right? The scheme you said, right?
Pretty much, yeah. And it's now coming out the others. Most people would have taken maybe 3-year fixed rates. So they're either, if they're looking now, they need to factor in the first home scheme, because it's not something that if they wanted to move their mortgage, there's a first home scheme element to it. Yeah. Right.
So that was my question. Is there like a wave of people now that you're seeing, that a big wall of people that have to figure this out?
Yes. Now, and from a business point of view, I haven't targeted it anyway. I think from next year, we will have a percentage of people who we would always talk to when their rates are coming towards an end. I think next year will be conversations we'll be having in much more detail around, well, hold on, what do you want to do with the first home scheme, or how just let it ride, or how do you view that? Because as I said, people would have bought it, using it, without really thinking about the long-term consequences. They would have
how to manage it.
This and listen, makes perfect sense. I think it's a great scheme to get you the home. Okay, well, you now have your home, but now it's about well, how do you manage this in the most cost-effective way that isn't going to impact your life, or at least you understand, like, you're not just forgetting about it. And when you buy a home and you see it as yours, you tend to, well, I'd say I'd almost forget that 20% doesn't belong to me.
Yeah.
Right? You just wouldn't think in those terms. You'd be thinking in the terms of this is mine. But the reality is you've used someone else has got 20% or whatever the
Yeah.
percentage may be.
They're your business partner in the investment, basically.
Yeah, and you need to factor that into well, a plan in a normal scheme of events. You'd hold it for the 30, 35 years, and then if you're selling it, and 20% will just go to someone else.
Yeah.
And that's
Yep.
how it would all pan out. So, and once you're aware of that, I always say to people, the decisions you make, once you're making them with your eyes fully open and have thought through and understand what it means, well, then it's not really a wrong decision. It's just you just don't blind yourself to the reality, I suppose, is the way
Yeah.
I describe it, you know.
Interesting. So 20% of the home is not yours, it belongs to. So can you allocate which 20%? Can you give them like the second bathroom or the garage or
Well,
sorry, I couldn't resist.
no, it's good. You're not, we're supposed to be a serious conversation here,
Oh,
but
yeah, sorry.
yeah.
Okay.
let's tease that a little bit further, okay? The 20%, it basically the first home scheme will only make up the difference from what the bank will lend to you. So you can't pick and choose. Do you understand? If the bank will lend you 350,000, you can't say, well, I'll only take 300 from the bank and I'll take the rest from the first home scheme.
Okay.
It makes up the gap between what the bank will lend and what you need to buy the home. Okay.
Okay.
So that's kind of really, really important. As to which room they take, well, their name is on the deeds, or it's part of the.
Okay. So you can't give them the 20%, the ugly closet and the second bathroom.
No. This is they have 20%. And if they're not using the help to buy, then 30% is the maximum. Okay. There was, and this is something to be, the first home scheme then does work off a location basis. And what I mean by that is they have maximum prices in certain locations. That has been altered this year. Okay. So previously, when you were looking at buying a house in Dublin, it was only 475. Don't know why they had that number, but it was different from the help to buy. It's now in line with the help to buy in Dublin at 500,000.
Okay.
Each other area has its own limits. Cork and Galway and Limerick would be higher than somewhere like Wicklow. So depending on where you're looking to buy, just basically Google first home scheme.
Oh, we'll either post it in the show notes, either
in the show,
a link to it, or we'll actually list them for people.
Sorry, you're more modern than me, mate. We are here to make people's lives easier. So that would be very, very useful as well.
So what about, which is great information, what about the local authority affordable purchase scheme?
That is really, really similar. Okay.
Yeah.
It is like but in this case, it's how do I describe it? It's more of a discount. Okay. So it's done by the government scheme. It's kind of the councils of certain houses that are being built, right? The council will designate a certain percentage of them to what they would call affordable housing. Okay.
Okay.
So the difference here would be with the first home scheme, you're buying through the selling agent. This is now kind of a council scheme who've got certain properties that are now basically designated as affordable housing. Okay. The principle works in very much the exact same way as the first home scheme. Except the house might be worth 500. Okay. They'll give a discount and they'll sell it for 400. Okay. Now they still own 20% of the property. Okay.
Okay.
You're just buying the house at 400,000 euro. Okay. And then you need to make up the difference between what from the mortgage, the help to buy, and your own savings. And the cost is 400. What you then don't have to do, there's no kind of after year 6 you're paying on service charges, right? That doesn't exist. However, what does exist is it's the exact same concept as the first home scheme. You don't own the house, right? Fully. Okay. There's a percentage of it that belongs to the scheme, and you can buy it back in the exact same way. or you can, and I think there's a 40-year period where after 4 years it has to be paid back, but it's a percentage of the value again. So
Okay.
it's the same as the first home scheme with a little bit of a twist, I suppose,
Yeah.
is the way to describe it.
Same concept, right?
The exact same concept. It's just being done through two different organizations. One is kind of the council, who have certain levels of properties that are deemed to be affordable housing, and then the rest is kind of the housing that are being sold to the market, right? They're not deemed to be affordable, but you're just using the first home scheme to make up the difference. So exact same concept, just two different ways of achieving the same thing, really, you know. And I think you need to be more lucky to get the affordable housing, okay? Because you can imagine the list of people who are looking for it is very, very large, okay? So there is the schemes on it that are kind of basically, how do I describe? They're just, there's a bit of a lottery, okay? Well, with the first home scheme, they're all the houses, right, in a development. This is a development with only a few there's only a few that are designated to be affordable housing. So it kind of works.
So it's a rare diamond if you get it. So let me ask you this then. Over the last 3 years, and you're going to say this is impossible to answer, but
I know where you're going with this.
Anyways. So let's say the last 3 years, what percentage of your first-time home buyers have availed each of these schemes? Like if you had to just add a rough number.
You could have told me this in advance of this conversation.
That's no fun.
And I could have looked really on top of my game. And
no, it's fun to see the shock on your face when I throw that question.
I'm throwing, yes, the forensic analysis of the clients. I can only speak from, and God, it's maybe 10%. Would be availing of the schemes, both the first home scheme and the affordable housing scheme. That's my best guess. And if you had given me a heads up that this question was coming, I would have had a better answer for you.
Never. And which have you seen as the most popular?
Well, first home scheme, because as I was mentioning, the affordable housing, it's a rare diamond, shall we say? There's a lesser with first home scheme. It's every house in development. The people selling it don't actually care what way you're purchasing it, right? With the affordable housing, it's literally these are being sold. There's a discount being given, right? So, it's definitely more on the first home scheme. One point to mention on the affordable housing, and it's kind of a little bit of a bugbear of mine. The bank, like, so say you're getting a house for 500, that's what its real value is, but you're getting it for 450. Okay, the banks are only giving you rates as if the real cost was 450. They're charging rates, and I think that's slightly off. They're like, they have different bands of rates based on what they call loan to value. Okay, and they're viewing the loan to value at the discounted price rather than this is just for the affordable housing scheme. But so I've seen that a couple of times, and I kind of go, oh, that annoys me. But I don't think it's a battle I'm going to win with the bank, if I was honest with you. And if I was in probably the shoes of the buyer, I probably wouldn't care. I'd be there, just get me the house. And it's not a significant difference to go, okay, we're being absolutely destroyed here because of it. The bank are just taking a very self-serving view, shall we say, in regard to how they're
a little cream on top, right? That the buyers won't argue against, but the bank's profit.
So it irks me a little bit, but I don't think I did try to debate it, shall we say, and I got quickly told these are the rules that we operate on, and I kind of go, okay. So it's how do I describe it? I think like there's still a huge property crisis. Might be overstating it, but it's certainly the words that the media are using around the houses here, and people in terms of not able to rent, find houses to rent, to buy. So these schemes they're helpful, but they certainly haven't cleared the sort of taken away the supply issue. Now, I did come across it yesterday that was suggesting with the new government rules around renting that there are being more properties that have come onto the market in Dublin. So hopefully you'll see a little bit less manic. this will be secondhand houses now, but let's manage
Yeah.
price increases. And I think if the supply goes up in any shape or form, it has to help the whole picture,
Yeah.
because
Yeah.
there's been huge gaps between supply and demand.
Interesting. John, let me ask you about this, about scheme stacking, which is a cool thing to say, but can buyers, for
Oh,
instance,
what does it mean?
scheme stacking is basically, the question is really, can buyers, for instance, combine help
Oh
to
yeah,
buy scheme and the
sorry.
first home scheme?
Well, yeah, and I touched on this earlier on. The first home scheme, right? And the help to buy. Remember what I said, start with the help to buy. And the help to buy is the one that you can lose out on if you don't understand your situation. Okay. And this is what people would make the mistake. You need to be borrowing 30% or 30%. Sorry, let's rephrase. You need to be bringing 30%. You need to be borrowing 70% of
70.
the cost price, right?
Yep.
So let's go to that example of 500,000. If the bank won't lend you 350,000, you can't scheme stack, to use your terminology, right? You can't use the first home scheme and the help to buy. Now, you can
Okay.
still use the first home scheme to 30%, but then you're foregoing the help to buy scheme. Okay.
Okay.
So it's not perfect. So you need, if you want to use the first home scheme and the help to buy, you need to be able to borrow, what's the word? The full 70%. So you need to get about, now it's not as much of a problem with the affordable wholesale because you're getting a discount and then you're as a percentage of the discount. But it's certainly, I've seen the amount of people who come to me, right, who kind of going, well, I'm going to use the first home scheme, I'm going to use the help to buy, and I'm going to buy a house. And I have to kind of burst their bubble a little bit. And I hate doing it, but it's the one thing that it kind of can lead to big disappointment because you misunderstand the facts. You misunderstand what's out there, and easily done. You paint the best picture for yourself and, okay, well, I can get this. Then you'll get people saying, oh yeah, and this is one point I haven't brought up. With these schemes, by the way, you're not allowed to get exceptions from the bank. Okay.
Yeah.
Right. So you hear people say, I'll get 4.5 times my salary. I'll use the help to buy and use the first home scheme. The ultimate scheme stacker. You'll be sorry you said that word.
Yeah.
But again, I have to say, well, no, you can't. With the first home scheme, you cannot get an exception. Okay.
No exceptions. Yeah.
No exceptions allowed. And it literally just makes up the gap. But the key piece of information there is the 70% if you want to use the help to buy scheme.
Okay. And anything else about grants you want to mention?
Well,
anything else?
there is and this is more on the secondhand property. I can just touch on it. Really, it's very kind of the refurbishment grant that I've had a couple of my clients use. If you're looking at buying a property has been derelict for 2 years, right? There are grants available to do it. Now, the bank will not take, so from a mortgage perspective, there's no relevance to this. There's no benefit to this at all. But in terms of buying yourself a home and costings of it, well, if you're buying a home that has been derelict for over 2 years, there are grants available. Now, keep in mind, the bank will want to know if it's livable in right away. If it's not livable in it right away, they'll want to know, do you have the funds to make it livable in right now? Okay, via survey. And if you don't, they won't factor in, oh, well, I might get a grant, right? They won't factor that into account. So if you're buying a derelict property, you need to be able to, okay, you would be getting a survey done. You'd get costings as to what it's going to cost to do it. And the bank then would say, okay, well, if it's going to cost 100 grand, do you qualify for the mortgage to cover whatever that costing may be? They will not entertain any possible grant that you may get.
Yeah.
But obviously, from your own financial point of view, well, there will be something that you would be factoring in if you can. But that's not something I'm an expert in giving proper advice. I'm just giving basically, go do your research on it. It is out there. The pitfalls from the bank point of view would be they will not take it into account.
Yeah. Okay. Good to know. And when people want more information, when they want to look at availing these schemes and grants, I mean, is it part of the mortgage process? They come and talk to you and you guide them, or is it they should go somewhere else to find that information?
Well, my role, where I feel that I'm adding value to the role, is like, we're not about getting people a mortgage. We're about helping them buy a home, right? So
Yeah.
that roadmap that we talk about it's kind of about understanding where you're at, understanding the opportunities, understanding the pitfalls. So I view that very much as part of our role as our educational piece to help people, because from a business point of view, we're not just, if we get a mortgage or them a mortgage, so what? If we can help them buy a home, A, we're helping our business, but B, we're bringing more value to our clients. And that's ultimately what this is around, is helping people buy a home, right? Now, am I the guy, the absolute expert in the, how do I describe it? The sort of the grants available after 2 years? No, I'm not.
Yeah.
I can highlight to someone, and where it comes to, well, this is where the bank would view it. You need to tease that element of it out. Where it comes to maybe bidding on secondhand properties, I can certainly give strategies there that I like. Am I going to gamble with your money? No, but so we offer what I would consider kind of hand-holding advice to the point you get the keys to your house.
Yeah.
There are
Counsel, you offer
Yeah.
you offer sound counsel. Yeah.
Yeah, the one thing I always say to people is I don't give relationship advice, because sometimes, right? Because sometimes it can't, like when you're dealing with single people, it can be more difficult for a single person to get a mortgage than someone very. I do have to sort of say, listen, no.
Wait, you've been giving me all my relationship and life advice the last 6
Yeah,
years.
I would take
wonder
that
why
out of
my life's a
pinch
disaster,
of
huh?
salt, my friend.
Well, awesome,
Oh,
John.
sorry.
This is great
But
info. I know a lot of people are going to get a lot of value out of it and have questions. And now, of course, they know where to turn to, and they know what to be looking for. So awesome information for the T and Mortgage podcast number 43. And is there anything you'd like to leave them with?
not really, other than I just hope you know where we are. If you have any questions, just drop me a mail, and we'll get back, and we can arrange an appointment if necessary.
Yeah, everyone, thank you so much for watching, following, subscribing, sharing, and your trust and your patronage. JC Mortgage, John Coleman, T and Mortgage podcast.
Cheerio, folks. All the best for now.